Hey, Garrett Moore here with Lone Star Benefits, coming at you with a brand new Lone Star Lessons. And today I wanted to talk through the basic terms as they relate to employer-sponsored group life policies. So the first term I wanted to talk through here is beneficiary. So beneficiary is going to be the person to receive the actual benefit if a claim were to be filed. So beneficiary can be anyone from a spouse, a child, a parent. It really just depends on who you want to elect as your beneficiary. The second term I wanted to talk through is going to be the basic life and AD&D benefit, and that's going to be the amount of money that is paid to the named beneficiary if a claim were to be filed. So the next term I wanted to talk through here is the age reduction schedule or benefit reduction schedule. Those two terms are interchangeable, but they mean the exact same thing. And it's going to be the amount that the benefit is going to be reduced by after a stated age. So it can vary based on carrier, but the ones that we see in our office the most often is reduced by 35% after the age of 65, and then reduced to 50% at the age of 70. So that's an age reduction schedule. The next few terms are going to be related more towards voluntary group life. So the first one is going to be the voluntary life maximum. Now that's just going to be the maximum amount of coverage that an employee can elect to actually buy up to. So the next term is going to be the minimum amount of coverage. And again, this relates to a voluntary group plan. And the minimum amount of coverage is going to be the smallest amount the employee can elect to enroll in. And it will also be the incremental amount of coverage that the employee will be buying to. So if they have a maximum amount of coverage on your group plan, for example, of $100,000 and a minimum amount of coverage of $5,000, the lowest amount that you could buy into is $5,000, and you would be buying all the way up to $100,000 max in increments of $5,000. So last couple terms I have for you here. The first one is going to be the guaranteed issue amount, and the guaranteed issue amount is the amount that the employee can buy up to before having to fill out an evidence of insurability form, and that's going to be an EOI. So an EOI is going to be just a short, simple, straightforward few-page questionnaire on the employee's health to make sure they are actually able to buy up to the amount they're enrolling in after they reach the guaranteed issue amount. So again, let's go back to that quick example. You have a maximum of $100,000 that you can buy into on the voluntary group life plan. You have a minimum of $5,000, which is the incremental amount you're going to be buying in. So in increments of $5,000 with a guaranteed issue of $50,000. So after you reach that $50,000 guaranteed issue limit, the employee will have to fill out an EOI, an evidence of insurability form, in order to continue to buy up to, let's just say $75,000 or the maximum of $100,000. So that's everything you need to know as far as the basic terms when it comes to group life policies. But if you have any other questions in the meantime, please do not hesitate to reach out. I'm happy to help where I can. Thanks so much.